Thank you for calling Clover Health. We are currently closed. Para español, presione dos. If you're experiencing a life-threatening emergency, please call 911.
Hello and welcome back to another video. I'm your host, Young Buffett, back at it again with another Wall Street Stonks versus Wall Street Bets challenge video. So if you are new here, please consider scrolling down, hitting that subscribe button because you don't want to miss this experiment. It's a fun experiment. It's an educational experiment. But essentially what we're doing is we're finding the most talked about stocks, the most hyped stocks, stocks that people are talking about on Reddit and other platforms, stocks that have a high potential for short squeezes and gamma squeezes. We're essentially putting money where a lot of people are putting money to see how we can enter and exit positions profitably and learn something along the way. Just to recap really quick, we bought Clove first around like $13 a share or so, and then it just kept on dropping. So we kept averaging down. Last video, I talked about my option strategy. So after this video, if you want to learn more about what I did with options, you should go check that out as well. In this video, we're going to be talking about, is a short squeeze even possible or likely in the short term, midterm? What needs to happen? What's going to happen? I don't know. Let's just jump right into it. So I always like to start the videos with a little bit of this. Ape Wisdom. This, again, just to recap, covers these multiple subreddits: Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stocks, investing, SPACs, options, and day trading. These are all subreddits where people talk about stocks. And this site tracks the top trending stocks on Reddit in the past 24 hours. A lot of you might already know about this site. I just like starting here and seeing what's going on, who's talking about what. Coming in number one, AMC, everyone's favorite, followed by GameStop, the original. Then SPY, I guess because it's at all-time highs. That makes sense. Space, again, that makes sense, but it is down 65%. I think these two are just losing their momentum. Apple, probably because it's at all-time highs, and some people are probably making a lot of money on that. Tesla's always just kind of chilling up here. Then we got Krispy Kreme. High potential for a meme stock. This ticker is one letter away from being D's nuts. I might put that down in my notes. That might be something we want to play around with, just strictly because of the ticker symbol. And then number 8, Clover Health Investments. Oh, so we are down on the trending list here. I wonder why. So a negative 68% in the past 24 hours of mentions throughout Reddit. What this does not cover, though, is r/Clove. That subreddit by itself is growing. There's a huge community of people on there. I just recently joined and I've been talking in there. A lot of cool people, a lot of really rich people. I didn't know so many whales are floating around the Clove space, but that's cool to know. They have higher cost basis than I do, but good luck. So jumping over to Clove, the mentions, 75 mentions, 241 upvotes, mentioning users, 64 people, seems like. Sentiment, 74%. Nearby words to Clove is Wish, AMC, Workhorse, Bot, GME, BB, Moon, CLNE, Shit, Out, Deep, Up, Like, UWMC, and such. Those are the words that are followed nearby when Clove is mentioned. That's interesting. So shit is a new one. Deep is another one. Okay, so let's see. Let's jump over to Swaggy Stocks. So Swaggy Stocks is Wall Street Bets, I believe. Their current comment volume, positive and negative sentiment. Space, Tesla, GME, AMC, Clove. So Clove is at around 14 mentions that are positive, 9 mentions that are negative, and then the comment volume is kind of declining, but it's at 6.34%, which is interesting. If we hop over to Clove's comment volume versus ticker sentiment over time, this is a really interesting view where we kind of realize that this whole mention thing is a lagging indicator. Because if you look here, the price of Clove was at $11 a share, and when it jumped up to 13 and people started getting excited about it, people only started talking about it when it actually went up in price. So it seems like we're over here right now. The price is around $9.26, and positive and negative sentiment are on the rise. Comment volume is rising as well. So that's interesting. I'm very curious to see what happens when the price is down, but comments go up. This week, I'm going to be watching really closely to see if the price will follow the comment volume, or if the comment volume needs to go down for the price to go up. I know the two don't really always correlate, but I'm just curious to see how that's going to play out. Very interesting. So jumping over to FinViz, I want to talk some numbers here. 36.93% of the float is shorted. That's a lot. I want to talk about what would need to happen for a short squeeze to happen. Before we do that, it's very important that we all understand what a short squeeze is. Short squeeze accelerates a stock's price as short sellers bail out to cut their losses. Okay? Contrarian investors try to anticipate a short squeeze and buy stocks that demonstrate a strong short interest. Okay? We got that. Both short sellers and contrarians are making a risky move. A wise investor has additional reasons for shorting or buying that stock. We have that as well. It's really important for a short squeeze to jump unexpectedly. Now, I say this because when we talk about hedge funds, we're not talking about stupid people. We're talking about institutions that have a lot of money and a lot of resources, and oftentimes know what they're doing. So I see a lot on Reddit where people say like, oh, this is going to squeeze to this is going to squeeze to that. But is it? Let me introduce you to days to cover. So days to cover measures the expected numbers of days to close out a company's outstanding shares that have been sold short. It computes a company's shares that are currently shorted divided by the average daily trading volume to give an approximation of time required, expressed in days, to close out of these short positions. Days to covers are related to short ratio as a measure of short interest in a stock. Blah, blah, blah. Key takeaways, key things you should know about days to cover. Days to cover is a temporal indication. Days to cover is a temporal indication of a short interest in a company stock, okay? Days to cover is calculated by taking the quantity of shares that are currently sold short and dividing that amount by the stock's average daily trading volume. A high days to cover measurement can signal a potential short squeeze. A high days to cover measurement can signal a potential short squeeze. Now, currently, Clove's days to cover is 1. That's not high. Sometimes it even goes below that. When Clove had its first pop, lock, and drop it moment over here, its days to cover was around 5. It's at 1 right now. So you're going to need the days to cover to go up for any sort of short squeeze to happen. Regardless of a short squeeze happening or not, I think this stock is actually really cheap. $9.27 for a legit company that has a $3.98 billion market cap. How many? 458 employees, disrupting the market with their technology and their services, partnering up with major companies. There's a lot of potential with Clover in general. But it's just interesting, this whole narrative of a short squeeze, which is actually, it's what I'm mostly interested in because I want to see where this stock can go. And I'm trying to play that momentum. But in the meantime, since we're down like 20% or so, we're selling puts, we're getting creative, we're averaging down. I just essentially want an opportunity to sell covered calls since we have 205 shares, 5 of which are free, funded by the puts. Again, if you want to see how I did that, you should go check out the options video that I posted not too long ago. But it's very interesting. I do think this stock should be anywhere from 10 to 20, just naturally. Another thing I want to look at is the cost to borrow. So a high cost to borrow would make hedge funds really jumpy. You don't necessarily want them to be too jumpy too fast. If you want a short squeeze, the cost to borrow the shares should start off low, get a lot of people short to get this short float really high, and then squeeze the hell out of it. So the cost to borrow right now is pretty high, which would make shorts kind of jumpy if price moved too fast. Right now, they're fine, I think. We actually don't know when shorts started shorting. I don't know what price they're at or where they need the price to be to break even. But something that's interesting is people who are buying way out of the money calls are actually not helping the cause. So if you believe in squeezing the hedge funds, if you are into that whole movement, you actually don't want to be buying deep out of the money calls. Why? Because who is selling you deep out of the money calls? Hedge funds and institutions. They're the ones writing those contracts. So if you're buying a call, like, okay, let's go to next week. Oh, man. Okay, so July 16th, the $20 call. 1,794 people or volume, just in general, paid 7 cents, 6 cents, 7 cents, whatever, like whatever the price was on Friday when they bought that. 1,794 people pretty much just gave institutions thousands of dollars for free. I don't think Clove's going to go up to 20 this week. They might flip out of it for a profit, but somebody is going to have to take the L on this. If you're buying closer to the money contracts, you're more likely to either get exercised or have an easier profitable trade here. But these deep out of the money ones, you're just throwing money at the hedge funds for free. And they get to use that to hedge their positions that they have short. So if you're going to go deep out of the money, have some time. Buy some time. Yeah, look at the volume on the ones, on the leaps. They're small. Okay, I think I need to make a video about don't buy deep out of the money. Obviously, I'm not a financial advisor. Everything I say in these videos are just educational and entertaining. I can't tell you what to do with your money, but if you're really into that whole hedge fund movement thing, I wouldn't be buying these, guys. So that's one interesting thing I could tell by just the delta alone. People are 102,000 calls were bought. That's a lot. That is a lot compared to puts. So if hedge funds are just sitting comfortably as the stock just falls, don't just give them the free money to just hang out short. We want them uncomfortable. Yeah, that's interesting. Will this short squeeze? I don't know. Will I be holding until it does? I don't know. Should I buy AMC? I don't know. I'm in it. 205 shares. Definitely not going to sell at a loss. So if you're interested in either daily, weekly updates, whatever I do, definitely hit that subscribe button. Hit that like button too. Makes me feel good about making these videos. And let me know if you have any questions. I get back to like every comment. So good luck. Have a good weekend. Let me know if you need anything. I love you. Okay, bye.